The Shriram Group has consolidated all the lending entities under one roof. We have with us Umesh Revankar, the Vice Chairman of the new combined entity. Umeshji, thank you so much for speaking to Business World. Firstly, tell us about the consolidated arm of the Shriram Group. What are we getting into now?
Thank you. See, basically, if you look at the two entities, lending entities, if the Shriram Transport Finance and Shriram City Union Finance, together we really cover all the products that is required for a typical middle-income businessman.
Correct.
We are focusing mostly on entrepreneurs, businessmen, individual operators, whether it's a truck, a tractor, a farmer, a shopkeeper, or mason, or carpenter. This kind of a category who generate income for making their living by using assets. Our truck operators, they use vehicle as an asset to earn their living.
Correct.
And the two-wheeler, even the two-wheeler purchases, most of the purchases are done through Shriram City Union. It is done for their livelihood. They may be traveling to some work. So it becomes part of their necessity. And the cash flow generated out of the business is repaid. So they use any asset what they buy. Even if they take gold loan, it is for a temporary working capital requirement of the business they use. So most of them are entrepreneur businessmen. And we kept it to different companies because traditionally we started as a truck financing company because we felt 40 years back that a truck is a most essential part to move the goods from a manufacturer to the consumer, from farmer to the consumer. So it keeps earning and it is a earning proposition. So we stuck to truck, then expanded to various other asset classes.
Correct.
As
the economy grew.
Economy grew, the passenger vehicle, agricultural equipment, construction equipment. That is in one side. That is under Shriram Transport Finance Company. We were basically lending to earning assets which are moving.
Correct.
And which can be registered in as per the Motor Vehicle Act so that we have control on the asset. The Shriram City Union Finance, we started much later. In around 2001, 2002, we started when the consumer products got demand. So we started initially with consumer durables, but we moved to two-wheelers, gold loan, and SME financing. SME is something which we came little later because only when we understood what for the people take loan for, when we understood that they have a business behind it, then we started financing SME also. So together we encompass all the product range that is required by a typical middle income group businessman. So we thought it is better to bring it together because then we can actually cross-sell the products of each company. Now imagine we have 1,825 branches. Shriram City Union has 970 branches. We were not selling other companies' product till now.
This is the largest retail NBFC in India by size, ladies and gentlemen. Umeshji, it comes at a time, when consumer sentiment is reviving just after COVID. And one of the biggest challenges, not only for the government, but all the sectors, you pick auto, you pick retail, has been slow demand. And again, a lack of availability of credit has been one of the few challenges. With your step, it looks like you're betting impeccably strongly on the lending business, on the credit business. What drives your confidence?
See, if you look at, there was a slowdown in economy by late 2018 and 19. Then COVID came in. Therefore, most of the capacity which was built earlier, that was never fully utilized. And therefore, there was excess capacity in the system for manufacturing, consumption, everything. But post-COVID, now I feel the economy is reviving. There are many reasons for that. One, government spent on projects, infrastructure are quite strong. And that generates a lot of employment and a lot of activity. Then the FMCG demand is quite good. A day-to-day requirement of the people and online players, e-commerce players like Amazon, Tata Click, or the big baskets. All these things have created a big demand for movement of the goods.
Correct.
So what last mile reach, last mile delivery, that is creating a fresh demand. This was not there 2 years back. So there's a fresh demand. And the third one is agricultural output has been continuously increasing. Even during the COVID, even when there was economy was in a negative growth, the agriculture economy grew. So that means always a CAGR growth of 3 to 4% in last 3 to 4 years in agri. That is again creating a demand, because agri means large output and large movement. Grains, vegetable, whatever it is. It requires a lot of vehicles and a lot of activities, warehouses, and the traders, businessmen, everybody gets involved in that rice mill. So that has created demand. One thing was missing was demand for white goods or discretionary spending. That was missing till maybe a month or 2 months back.
Sure.
And last 1 month we have seen huge discretionary spend. Almost every town in India, I understand, there were huge social functions like marriages and other functions, and that created a lot of discretionary demand. And suddenly you found that smile on shopkeeper's face, which was missing for last 2-3 years. That means a lot of goods are being consumed. See, discretionary spending is something you're taking money out of your savings, and that's a fresh demand. What you require for day-to-day is FMCG or food, other things.
Where do you see the maximum demand coming from, Umeshji? Is it will it be commercial vehicle financing, two-wheeler financing, gold loan? Which will be the area where you will see maximum resurgence of demand in the coming years?
I feel demand will come everywhere. So imagine you just take when I talk about discretionary spending, wedding-related cloths, textile. Now, the people who are involved in this special kind of requirement for the wedding cloth, it is not normal cloth. Where you require a designer, where you require a different kind of stitching or patterns, all those things. That means what? More people are getting employed, more demand is coming for those items which was not normally in the demand, and demand for the white goods, because people would like to gift and buy. So new houses, there is good demand for buying new houses also in the last 6 months.
Correct.
I feel all these are creating economic activity. So demand will be not only for moving the goods, demand will be from SME also. Somebody is manufacturing something, a special item, a small scale. That also gets demanded.
So you're confident in the so-called V-shaped recovery of the economy, which has been a bet by major economists of the country. Now, NBFC has been a good business for you. Are you also looking to get into the banking business going forward?
As of now, we are focused on NBFC. Being NBFC has an advantage of being quick-footed. We can reach, we can deliver, and we also can service the way we want. Bank, you need to be a little different to meet the need of the people, and especially when we are focusing on underbanked and unbanked. That itself says, when I say, that means where bank cannot reach, we are able to reach, or we are delivering. So I don't have intention to get into a banking and then lend to a unbanked, which may not be a immediate goal. But we are not ruling out anything now. Right now, it is not in our idea or radar.
Okay. And is there a specific area of focus, like you're more focused towards tier 2, semi-urban and urban, because you mentioned infrastructure projects. So is the focus of Shriram Finance, which in itself is the largest retail NBFC, and maximum amount of demand for credit is coming from small towns. So is that the key area of your focus?
Yes, we have always been focusing in semi-urban and rural market. Metro, no. Tier 1, yes, to some extent. But always preference has been a semi-urban and rural market, because that's where the credit, it is a credit-starved economy by and large. And most of the small entrepreneurs, they stay in these locations.
Correct. Now, Umesh, in 2017, there was a failed merger attempt with IDFC, and there were conversations going about Ajay P. Ramal's exit and TPG Group's exit. As a group, what was going on in your mind, and was consolidation on your mind over the past 3-4 years? I mean, how did you plan, assess the risks coming, and then COVID? So, what was going on in your mind as one of the senior members of the board team?
See, the merger was something which we have been debating for nearly 3 years. The IDFC is totally a different issue. We felt that one of the company, Shriram City Union, is a purely retail small ticket loan company that can get merged into IDFC Bank.
Okay.
And the Shriram Transport Finance was supposed to be independent. That was the idea. Then that did not work out due to certain reason. And the other option we had even at that time was merging Shriram Transport and Shriram City Union and making it a retail finance, total retail finance company. And we did not pursue immediately because we wanted to be sure that it benefits everyone. See, anything we do should benefit. One is, first is shareholders. It should benefit the lender or it should benefit the employees, it should benefit the customer. But in this, what is most critical is benefiting customer. Whether customer is better serviced and if whether he is more satisfied, whether he gets all product at one place, whether my productivity increases. These are all the first thing. Then employee, whether he is more comfortable in selling multi-product, whether his service level goes up, whether his productivity goes up. As far as the shareholders or lenders, they would see whether our margin efficiency improves, margin improves, profitability improves. That they are more focused on, because as the revenue increases, as the bottom line improves, automatically they get a better assurance of the loan given, or shareholders get better return on their investment. That's how it spans. So we were looking at each of this, but the primary focus was on customer. Today, over the last 3 years of debate or discussion internally, we realized that what we feel, multi-product and delivery of these products to the customer can be achieved because there is an improvement in our technology. The way we have adapted to technology, the way we have onboarded the customer on the digital, because most of our customers were not digital savvy and they were not very comfortable in using technology for making payment or receiving payment. They did not even have a bank account. And when I say I did not have a bank account, all our loan is given on check only. They had a bank account, but which is not used. That's how it is. So we made sure that first of all, the digital journey is understood by the customer.
Correct.
Once we felt we are able to do that, then we felt now the merging two entity becomes easier, because I can put all my product across on my digital platform, or it can be serviced to executive, relationship executive, much more comfortably. Because giving multi-product is easy, but servicing multi-product is difficult.
I'm glad you mentioned that. Now, going forward, you have been a veteran in this space. Going forward, there has been inundation of lending apps. UPI has come in the last, and the ecosystem has matured in the last 2 years. There are apps which promise youngsters that pay now and pay our bills later. I don't even remember the names of the few of them. Now, going forward, the space is inundated with very micro, small financing to largest of the retail financiers. How do you see the space evolving? That's one. And what are the key challenges in this space going forward? And thirdly, how is your focus from a digital perspective changed?
Basically, when I looked at a customer, our customers, a typically underbanked or unbanked customer, he did not have a formal financial inclusion. He had a bank account, but when I say formal financial inclusion, he would procure goods in cash, sell in cash, and repay in cash. My trucker would take a goods, take the advance, reach a place, Whatever bill he has, he will discount it and take the cash. When he comes with the cash, why should he go back to bank and give the check to us? He would prefer to give the cash to us. So, moment something is converted into cash, then it remains in cash. It doesn't go back to bank and gets converted into digital. So that's one of the reason digital did not reach many of the customers, or banks could not reach many of the customers. So we need to really handhold them. Handholding is very important. Today, most of our customers are able to make a digital transaction, not because they know how to make transaction. It is because we train them, we teach them, we ask them to make small transaction, and also give a confidence to them that they can make. So this requires a lot of handholding and helping. So today we are confident that we can migrate most of our customer into digital transaction. Then only we felt that we should now invest on digital. Till now, we did not really invest heavily on digital because technology keeps changing.
So are you looking for a unified app?
We are looking for a unified app. It will be called Shriram 1, and it will be a super app where the customer can get all kind of services, including his utility payment and other services. It's not that only product related service. He should feel comfortable being there and use it for all his personal need also. So we have gone to that extent. So that journey, the customer's journey, where trail is also there, where he need not remember, keep an account, that helps customer very much. So we are now confident that merging gives a large database. Because what is important in a digital journey? If at all you want to understand customer need, customize a product, or create a need for the customer. Customer may require, but he may not know the need. But we need to understand it by analytics. So when you have big data, large database, then you can spend on analytics and create that, understand that. Otherwise, with the small sample, you don't understand things.
Correct.
So in the merged entity, we have around 2 crore customers database. That's very important. And as a 2 separate entity, we cannot exchange data because there are 2 separate shareholders. And RBI also do not appreciate sharing database.
Are you confident of the shareholder approval?
We need to reach out to most of the shareholders. We are quite confident that we would be able to convey why we have done, rationale behind it. Because the swap ratio arrived is not as per our wish to merge or acquire the company. It is as per the independent valuers calculation, depending upon what is market practice is. So we are confident that shareholders will appreciate the same, and we would be engaging with them. We have another 6 to 7 months before going for the shareholders voting. And we have enough time to reach out to most of our minority shareholders. And we are quite confident that it will come through.
Sure. Now, last question, Umeshji. Of lately, RBI has also very clearly defined that there needs to be separate financing made available for the EV segment, to ease the demand, to get easy credit. Now, a lot of large corporations are also entering into commercial EV trucks. There's a possibility. Now, is there a special provision because you are heavily into transport loans as well? So, is there a special place for EVs, commercial EVs going forward? I mean, that is one question which a lot of people wanted me to ask you.
Definitely, yes. See, we are looking at EV seriously. And we know automatically, it will go in phases. It will not happen. Now, the first thing that is going to happen is a two-wheeler. There will be more, at least 50% of the two-wheeler will be electric vehicle in 2 years. Around 30% of the vehicle in 3-wheelers. Maybe another 20% in 4-wheeler, or maybe a little less.
We have a 30% target till 2030.
Yeah, I think we are going to reach there.
Okay.
At that time, my portfolio also would be automatically 30% in EV.
Okay.
Or maybe a little more. We are focusing on these changes and trying to understand. But if you look at commercial vehicle, what's happening today is people are now moving into CNG. See, every change happens gradually. It doesn't happen overnight. In a two-wheeler and three-wheeler, where the battery cost is dependent on the size of the battery, capacity of the battery, that is falling every year. And they say by 23-24, acquiring a battery charged vehicle and the diesel will be almost equal or viable. So people can prefer over a diesel or petrol a electric vehicle. Right now it is expensive.
Correct.
But what is going to happen is now the CNG is being focused only because heavy vehicle on electric is a difficult proposition because of it become highly expensive. It's as good as maybe 4 times expensive than the normal diesel vehicle. So it's unviable. So people are likely to move to CNG because CNG today is available. CNG cost is 65 per kg, whereas diesel is around 100 per liter. So equivalent. So people would prefer to go to CNG because it is at a discount compared to diesel in running of a vehicle. So now electric battery need to compete with CNG. So that will take further time, maybe another 4-5 years.
So your priorities will depend on the market as the market evolves. That's what you're trying to tell. There won't be some upfront loan offerings from your end. Okay. Umesh ji, thank you so much for talking to Business World. This was indeed a pleasure. Thank you so much.
Thank you very much.